while the world was distracted by the daily noise of political theater and fluctuating interest rates. The tectonic plates of the global financial order just shifted violently in the dead of night. On January 3, 2026, a heavy cargo plane canned from Caracas, Venezuela. It had no flight plan. Its transponder was deactivated the moment it reached international airspace. But high-altitude tracking and intelligence leaks have revealed a truth the mainstream media is too afraid to touch. 200 tons of physical silver and gold were moved directly into the vaults of Beijing. This wasn't a standard trade. This was a strategic evacuation of national wealth as the United States prepares for what many call an imminent intervention. The Venezuelan leadership didn't look to the banks or the digital markets. They turned to the only thing that retains value when the bombs start falling and the sanctions hit 100%. Hard, physical metal. This secret flight is the smoking gun of a new era. An era where the US dollar is no longer the ultimate authority, and where the great silver exit is being led by sovereign nations fleeing a failing system. To understand the magnitude of this event, we must look at the mechanics of the ghost flight. For years, the West has utilized the weaponized dollar to isolate nations that do not align with its geopolitical interests. Venezuela, long the target of these financial strikes, has finally reached a breaking point. Reports indicate that Nicolas Maduro, anticipating a total freeze of Western-held assets, decided to liquidate the nation's remaining strategic stockpile of silver and gold. This mirrors a pattern we saw in 2019 when gold was moved to Russia and Turkey to bypass sanctions. But this time, the focus shifted to silver, the indispensable metal of the modern age. The aircraft took a dark route, bypassing NATO-monitored corridors and refueling in friendly African territories before landing in China. This was a direct barter. 200 tons of bullion in exchange for Chinese technology, advanced surveillance systems, and a promise of political protection. Not a single US dollar was used as a middleman. No SWIFT message was sent. No New York bank took a fee. This flight was the first live test of a parallel global economy, where the New York banking system is entirely irrelevant. The silver deficit and the Chinese hunger. Why silver? To the average retail investor, silver is just a volatile metal. To the Chinese Communist Party, silver is the fuel of their industrial dominance. China currently produces 80% of the world's solar panels. With the global transition to high-efficiency N-type solar cells, the demand for silver has reached a fever pitch. By accepting 200 tons of silver from a desperate Venezuela, China isn't just helping an ally. They are front-running a global shortage. They are acquiring a strategic resource at a massive discount, ensuring that while the West struggles with supply chain delays, the Chinese industrial machine remains lubricated with physical metal. The military-industrial implication. This is where the story turns from a financial thriller into a matter of national security. The Pentagon is currently facing a silent crisis. Modern warfare is built on silver. From the guidance systems of Tomahawk missiles to the advanced radar arrays of the F-35, silver's electrical conductivity is irreplaceable. Currently, the U.S. is nearly 80% dependent on silver imports. Every ounce of metal that China pulls into its vaults is an ounce that Raytheon, Lockheed Martin, and Northrop Grumman cannot access. By facilitating this ghost flight, China has effectively conducted a strategic strike on the U.S. military supply chain without firing a single shot. In a future conflict, the U.S. might have the printing press to fund a war, but China will have the raw materials to build the weapons. See the death of trust and the LBMA precedent. The move by Venezuela is also a direct reaction to the loss of trust in Western custodianship. In recent years, the Bank of England famously refused to return Venezuela's gold stored in London. That event sent a shockwave through every central bank in the world. The message was clear. Your gold is only yours if the West agrees with your politics. Maduro's decision to move his silver to Beijing is a signal that nations are no longer willing to risk their wealth in London or New York. We are about to see a wave of repatriation requests. If several nations demand their physical metal back at once, the LBMA and COMEX vaults, already at historic lows, will likely be found empty. The broken mirror, paper versus physical. The most shocking aspect of this 200-ton movement is that the spot price on the COMEX barely reacted. This is the ultimate proof that the silver market is fractured. We have a paper market where banks trade digital receipts. to suppress the price, and a physical market where sovereign nations are moving hundreds of tons in the middle of the night. Strategic players are ignoring the screen price. They are looking at the inventory. When the physical metal is gone, the paper market will simply cease to function. The iceberg order of global demand is finally becoming visible, and the tip of that iceberg is pointing directly at a massive price explosion for anyone holding the physical asset. The formation of the commodity axis. We are witnessing the birth of a new financial alliance. Russia, China, Iran, and Venezuela are pooling their resources to create a real money standard. Last month, Ghana used gold to buy oil. Today, Venezuela uses silver to buy technology. Tomorrow, it will be Saudi Arabia. The exorbitant privilege of the US dollar relied on the fact that all commodities were priced in greenbacks. That world is ending. The flight from Caracas proves that a new barter-based, metal-backed system is already operational. This is the monetary reset happening in real time, ton by ton. The ghost flight of 2026 is a microcosm of the global economy's future. The West is left with the paper, the debt, the derivatives, and the rhetoric, while the East is securing the physical wealth. For the people of Venezuela, this is a tragedy. The final looting of their national heritage to keep a regime alive. But for the rest of the world, it is a warning. If a sovereign leader, with access to global intelligence, decides that physical silver in a Chinese vault is safer than dollars in a bank, you must ask yourself, what do they know that you don't? The era of digital promises is being replaced by the era of hard assets. Possession is no longer just 9/10 of the law. In a world of sanctions and freezes, possession is the only law. As the U.S. watches its influence fly away on an unmarked cargo plane, the question remains, are you prepared for a world where the dollar is just another piece of paper? The plane has landed. The silver is gone. The gates of the old system are closing. Secure your position before the transponders go dark on the entire global economy. Is this the final nail in the coffin for the petrodollar, or can the U.S. reclaim its dominance through force? Share your thoughts in the comments below. We are watching the skies so you don't have to.
December 22, 2025. While the world was distracted by holiday lights, a silent detonation rocked the global markets. Spot silver shredded every technical resistance like tissue paper, hitting a staggering all-time high of $69.53 per ounce. Why now? Why has the poor man's gold surged 130% in a single year, leaving gold's 60% gain in the dust? This isn't just a rally, it's the short squeeze of millennial proportions. While the masses chased volatile shitcoins, the smart money was quietly siphoning physical inventory out of COMEX and LBMA vaults, creating a lethal liquidity vacuum. The paper silver market is about to face a brutal reality. There is no physical metal left to back their leveraged bets. If you think $70 is the ceiling, you're misreading the tape. This is the death knell for the big shorts and a calculated trap for the arrogant. The spring is coiled. The trigger has been pulled. Welcome to the silver endgame. Follow the trail of breadcrumbs into the dark heart of the global financial plumbing. My investigation reveals a three-pronged pincer movement designed by the smart money to crush the shorts and corner a market that is fundamentally broken. We are not just looking at a price rally, we are looking at the controlled demolition of the paper-silver illusion. 1. The debasement of the fiat shield. First, we must look at the Federal Reserve's systematic betrayal of the US dollar. Jerome Powell has effectively waved the white flag in the war against inflation by slashing the federal funds rate to the 3.5 to 3.75% corridor and stealthily reigniting the quantitative easing furnace. The Fed has signaled that the dollar is no longer a store of value, it is a depreciating liability. With the DXY dollar index bleeding out to a low of 98.6, the global elite are rotating their wealth out of digital promises and into the only conductor that matters. When fiat dies, Bach, silver, is the resurrection. 2. The industrial death trap, AI and the net zero facade. While the media distracts you with political theater, a structural supply-demand vortex is swallowing every available ounce of silver on the planet. This isn't just about jewelry, it's about the blood of the Fourth Industrial Revolution. 59% of global silver supply is now locked in industrial applications. Consider this. Each solar panel is a silver-hungry beast, consuming approximately 20 grams per unit. As the world blindly rushes toward the net zero mandate, they have inadvertently created a commodity trap. Couple this with the explosive growth of AI data centers and 5G infrastructure, both of which rely on silver's unparalleled conductivity, and you have a recipe for a structural deficit. We are currently entering the 5th consecutive year of a supply shortfall, with a cumulative deficit nearing 800 million ounces. The mines in Mexico and Peru are screaming for mercy, yet the world's appetite for AI and green energy is insatiable. 3. The ghost vaults of London and COMEX. The most damning evidence, however, lies in the vaults. My forensic analysis of the London Bullion Association reveals a chilling reality. Silver inventories have evaporated by 40% since 2022. We are seeing reports of institutional titans desperately chartering private cargo jets to airlift physical bullion across the Atlantic just to meet delivery obligations and avoid a technical default. In Shanghai, stocks have hit a 10-year nadir, and the COMEX registered inventory has plummeted to a mere 138 million ounces. The global buffer for industrial consumption has shrunk to a terrifying 30 to 45 days. The big banks have spent decades suppressing the price of silver through massive naked short positions on the COMEX, but you cannot print physical atoms. The iceberg orders are now surfacing. The whales are no longer buying paper. They are taking delivery. And when the vaults finally run dry, the big shorts won't just lose money, they will be incinerated. You are witnessing the greatest wealth transfer in history, hidden in plain sight.
Connect the dots. The naval skirmish in Venezuela isn't just news, it's an opening gambit in the Great Resource War. By neutralizing 30 vessels, the U.S. is performing a surgical amputation of resource liquidity. Along with the Israel-Iran shadow war, these are systemic shocks designed to shatter global supply chains. In high-stakes finance, instability is the ultimate alpha. When the map burns, silver becomes the ultimate safe haven buffer. But here is the secret. Unlike gold's ocean of liquidity, the silver market is a tiny pond, a mere rounding error compared to the $100 trillion bond market. Imagine a fire hose of scared capital fleeing bonds and trying to squeeze into a teacup. That is silver, a coiled spring of decade-long suppression meeting a geopolitical spark. Now, consider the net zero paradox. By mandating green energy, governments unwittingly signed an irrevocable contract to buy silver at any price. While central banks claim to fight inflation, their industrial policies for solar, EV, and AI drive silver demand into a structural supercycle. They have trapped themselves as involuntary buyers of last resort. They are desperate. They need silver for their green utopia in AI state, but atoms are scarce. Their failing strategy? Print more fiat to subsidize demand, devalue the currency, and inadvertently propel silver prices higher. This is a feedback loop of systemic failure. We don't trade the news, we trade the inevitability of the collapse. The establishment bets on their narrative, we bet on the laws of physics and the scarcity of atoms. The spring is no longer just coiled, it is fracturing the casing. Are you positioned for the release? Don't let $70 scare you. To an investigator, price is just a distraction. Value is what matters. In 1980, silver hit $50. Adjusted for 2025 inflation, that peak is actually $200 an ounce. We aren't in a bubble. We are just beginning to correct a decade of suppression. Unlike the Hunt Brothers game in 1980 or the QE2 spike in 2011, 2025 is the perfect storm.
It is the convergence of a real physical deficit, the AI industrial revolution, and the terminal debasement of the dollar. You can't print physical atoms to fix this. The final warning, the margin trap. The establishment is fighting back. Exchanges in Shanghai and New York, COMEX, are already raising margin requirements. This is a margin trap, a calculated move to force retail traders using high leverage to panic sell. They want your silver at a discount. Do not give it to them. The execution plan. Weaponize patience. The market is overbought. Don't chase the peak. Wait for the margin shakeout to pull prices back to the 60 to 65 zone. That is where the smart money has set their iceberg orders. Exercise leverage. Silver is high velocity. A 20% intraday swing is normal. Forget 10x leverage. Hold the asset, not the debt. The big picture vision. Ignore the $75 lowball targets from big banks. They are pacifiers. When a structural deficit meets a currency collapse, there is no ceiling. The veil is torn. Silver is the digital crude of the AI era. The whales are in position, and the spring is compressed to its limit. Will you be crushed with the crowd, or will you follow the smart money? The hunt is on. The war is just begun.
October 2025. A suffocating tension hangs over the APEC summit in Kuala Lumpur. The world holds its breath as Donald Trump and Xi Jinping face off in a high-stakes standoff. Retail investors, the crowd we call the small fry, bet their entire portfolios on a chaos scenario, expecting a geopolitical explosion to send precious metals into the stratosphere. But the moment the handshake was televised, a massacre ensued. And it didn't start with gold. Silver was the first victim led to the chopping block. While all eyes were fixed on gold, silver, the poor man's gold that serves as the industrial heartbeat of the planet, was hammered down by over 5% in a single New York trading session. This wasn't a standard correction, it was a calculated free fall. Retailers fled in a panic as massive red candles sliced through every technical support level. They fell for the media trap, the narrative that the Kuala Lumpur Peace Accord signaled an end to instability, stripping silver of its reason to exist at premium prices. In an instant, silver hit its peak and was violently dragged down to the $30 zone. A historic fever turned into a bloodbath on the COMEX floor. Why would a peace deal be a death sentence for silver? The answer isn't in the Bloomberg headlines. It's buried in a classified memorandum, the Kuala Lumpur Joint Arrangement. A backroom deal turned the white metal into a sacrificial pawn for a higher power play. While the paper price was being decimated on your screen, behind the curtain, physical silver was being drained from vaults at a terrifying velocity. Smart money was casting a massive net, using the crowd's misguided euphoria as bait. To understand why silver was executed to set the precedent, we must look at the core of the November 4, 2025 Kuala Lumpur Agreement. One clause sent shockwaves through the elite. China agreed to lift export controls on rare earth elements, the oxygen for the U.S. defense and semiconductor industries. In exchange, Washington greenlit the export of NVIDIA H200 AI chips to Beijing. Think logically. Silver is the essential component in solar panels and EVs, sectors China dominates. When trade risks were neutralized by this chips for minerals swap, the paper-driven need to stockpile silver for supply chain protection vanished. The retail crowd panicked, believing the green energy era was over under Trump. But what is the truth? The whales behind the major hedge funds were using iceberg orders, massive buy orders broken into tiny pieces to hide their footprint, to quietly accumulate silver at this massive discount. They are preparing for a scenario you haven't been told, the explosion of next-gen AI infrastructure, which consumes 3 times more silver than legacy technology. This is a global shareholder blood transfusion.
They suppressed the price with political noise to strip the weak hands of their assets, preparing for the spring to coil before the AI demand hits an unbreakable ceiling. Silver was the spark. Gold was the forest fire. Immediately after silver was pushed into the abyss to trigger a domino effect, gold, the king of assets, was next on the hit list. To understand why gold collapsed from its $4,500 peak to below $4,300, we have to follow the money along a trail that leads straight to a man the public barely understands, Scott Kenneth Homer Besant. It is no accident that Trump chose a former George Soros protege as his Treasury Secretary. Besant is not a politician. He is a market architect, a master of the invisible cage. He spent decades learning how to break currencies and manipulate global flows from the shadows. Now he's been given the keys to the most powerful weapon in the world, the U.S. Treasury. Investigative data reveals that upon taking office, Besant initiated Operation Dollar Fortress. This wasn't just a policy, it was a declaration of war against hard assets. They didn't just sell gold, they used the weaponized interest rate to make gold feel like a burden. They created a reality where holding a bar of gold felt like holding a stone while the Dollar Fortress was handing out bricks of risk-free cash. This is a nation-state-level liquidity swap. You are watching a great betrayal of the gold standard dream. The U.S. needed China to keep buying its debt to fund the $38.1 trillion deficit, and China needed the U.S. to ease the AI chip blockade on NVIDIA. Gold and silver were suppressed to serve as the industrial grease for this secret deal. They are manufacturing an illusion of stability, a temporary peace designed to trick the crowd into thinking the era of safe havens is over. They want you to believe the dollar has been fixed so they can accumulate the gold you're throwing away. They are burning the white and yellow metals to keep the furnace of the debt-based system running for one more year. Let's perform a forensic autopsy on the Trump 2.0 economic engine. Scott Besant is driving the 3-3-3 policy, 3% GDP growth, reducing the deficit to 3%, and boosting oil production by 3 million barrels a day. It sounds like a dream for the dollar and a nightmare for gold, right? But look at the hard reality. U.S. national debt has hit $38.1 trillion. Every 100 days, the U.S. adds another $1 trillion in debt. A 4.5% interest rate means the government is paying a staggering amount of interest annually, a figure that now exceeds the entire national defense budget. The strong dollar is a hall of mirrors sustained by temporary political truces like Kuala Lumpur. Trump wants a strong dollar to force other nations to buy American, but the debt system cannot survive high interest rates forever. This is an irreconcilable internal contradiction. Silver and gold are currently like a spring being compressed by a titanic force called monetary policy. The harder the compression, the more violent the eventual release. When the Kuala Lumpur Agreement inevitably frays, and it will as new tariff barriers rise in 2026, this spring will unleash its full energy. Do not be deceived by the red candles on your COMEX screen. The plunge of silver to the $30 zone and gold below $4,300 is not the end. It is the starting gun for a massive financial restructuring. The smart money is cleaning the market, flushing out the weak hands to prepare for an unstoppable surge. When the faith in artificial peace evaporates and the $38.1 trillion debt burden begins to choke the U.S. economy, the world will realize that no handshake can replace the intrinsic value of physical metal. The next target for silver isn't just the old high, it's the $50 to $70 range, while gold will set its sights on the $5,000 milestone. A final word of advice: do not sell your soul at this technical support level. The whales are waiting for your panic to complete their final accumulation. You must choose Be a victim of the Kuala Lumpur Compact or a partner to gold and silver on their journey to a new peak. The decision is yours. Hold your ground. The spring is about to snap.